Good morning, this is John Harmon. I'm founder, president, and CEO of the African American Chamber of Commerce of New Jersey, and extremely delighted to partner with one of our strongest partners in the state of New Jersey, the New Jersey Economic Development Authority, my good friend and co-laborer, Tim Sullivan, the CEO, and the many professionals over at the EDA. What I like about this partnership is that we have the ability to sit down as professionals, check egos at the door, and work towards real meaningful solutions to help businesses in the state of New Jersey. We're often creative. Sometimes we have to work around policy, but the end goal is to help any business that desires to do business in New Jersey, help them, one, to achieve that goal, and two, help them to build on their success as they endeavor to advance their enterprise. Today's conversation is all about connecting you with resources, with opportunities and information that will ultimately contribute to your success. It's all about a mutual benefit. It's not about me, but it's ultimately about you, and not about who you know, but ultimately who knows you. There's tremendous opportunity occurring throughout the state of New Jersey in both the public and private sector. And everyone knows if you're in business, in order to scale, build capacity, and to sustain your enterprise, you need resources. You need access to incentives and programs, the tax cuts. The New Jersey Economic Development Authority has all of that and more. You need access to people that have answers to questions that may be impeding you from getting where you want to go. Collectively, the African American Chamber of Commerce of New Jersey and the New Jersey Economic Development Authority are your genuine partners for success. You know, oftentimes business owners try to navigate this pathway to success alone. And I would submit to you, as one who had his own business for 16 years and has been a chamber executive for now over 25 years, this desire to go forward on your own is a formula for disaster. New Jersey has a multitude of sole proprietorships. These are men and women who are operating on their own, but we encourage you to get connected with us so that you may grow from one business to two employees to thousands. You look at Walmart. Sam Walton started with one store in a little town called Bentonville, Arkansas. Today they have over 10,000 stores. Jack Taylor started Enterprise Rental Car in St. Louis with 6 cars. And now they're the largest player in the country. So sometimes you just gotta think a little larger than your initial vision, but you cannot achieve that next level of success without coalescing a team of folks that can help you get there. Going at it alone, it'll get you somewhere, but going at it aligned with some committed soldiers that embrace your vision, that will support you and encourage you, and also admonish you sometimes when you get off the rails. That's the only way to have a large, sustainable, respected, professional enterprise that's running efficiently, innovatively, effectively, with strong profit margins, and just contributing to the economy in a meaningful way. That's about all I got to share. I can talk about businesses forever and ever, but just keep in mind, we would encourage you to give the African American Chamber of Commerce of New Jersey an opportunity to contribute to your success. We have many members on today. We have staff on today. Mary Griffin, I know she's here. She's our Vice President of Membership Relations. Take a look at our website at AACCNJ.com. Do some little counterintelligence or surveillance on your own. Get your information and then give us a call, 609-571-1620. With that said, thank you all. I'll be standing by. And let's go to Tim Sullivan, my man, CEO of the New Jersey Economic Development Authority. Tim?
Well, thank you, John. First of all, for those kind words, but more importantly, thanks for everything you do, not just with us, but all throughout the state to support, businesses generally, and of course, businesses that are your members and businesses from the African-American business community. Couldn't have a stronger champion and a better partner than John. And that partnership, as John mentioned, sometimes means John calls me up and says, hey, appreciate everything you're doing, but there's a couple of things you could be doing better and different. And that's what good partners do. We appreciate that. We had this meeting or this webinar, whatever we're calling these Zoom things, came out of John and Jackie Taylor from EY and I had breakfast earlier this summer, and we were talking about a whole bunch of things. And one of the things I was making the case for is we have all these great new programs, and some of them are old programs, some of them are new programs, and you're going to hear about those programs in a little bit. But we could use some help getting the word out. And I think it was Jackie's idea. It said, Black Business Month is coming up in August. Why don't we put together a session where we invite some folks from the chamber, and EY would gather some folks, and we could have an opportunity to do a little bit of a commercial and an infomercial about some of these great programs to support businesses large and small, with a whole bunch of programs that Governor Murphy has stood up in the last, particularly sort of in the post-COVID or from COVID onward era, to support, with a really intentional focus on supporting minority-owned, and when we say minority-owned, particularly Black and Latino-owned, women-owned, veteran-owned, LGBT-owned small businesses in New Jersey, because we know, COVID didn't create the problems, problems of access to capital, nor did it create the disparities in the economy, obviously. But it sure as hell laid them bare, because Black and Latino businesses had a much tougher time during the pandemic than kind of the general experience, and it made them worse. So really bad. So, collectively under Governor Murphy's leadership and in partnership with great folks like John, we're trying to put a big shoulder into supporting, in particular, minority and women-owned businesses coming out of the pandemic and into recovery mode. The good news is we've got a great suite of tools to support that community, this community, and what better occasion than Black Business Month to take an opportunity to kind of give an update on where we are and all that. So again, I want to thank the chamber, I want to thank EY for their partnership in organizing this. We've got a great group of colleagues we're going to follow on from me. The person I'm going to hand it to, one of the great gifts John Harmon gave me, not a gift, it makes sense like John's giving me inappropriate things. One of the great things John Harmon has done for the EDA was introduce me to the next speaker, Michelle Bowden, who joined our team a little more than 2.5 years ago as our Chief Diversity and Inclusion Officer. And Michelle's role is obviously important for a variety of reasons. Yes, she is focused internally on making sure we're hiring and promoting and building an EDA that looks more like the people we serve, but also focused on making sure our programs are delivering on our commitment to building a stronger and fairer and more inclusive New Jersey economy. So no small set of responsibilities for Michelle, no pressure, but what a great colleague she's been. And John was great to introduce me and some of my colleagues to Michelle going back almost 3 years ago. And here we are, and wouldn't say we're mission accomplished, but we've certainly made some great progress and continue to work hard at it. So with that, Michelle, I'll hand it over to you, and you can kind of MC us through the day.
All right, thank you, Tim. And a big shout out to you and John, because I will say this, that I call it the Obama-Biden bromance, but it really does produce great things, because it's partners like John and the African American Chamber that really keep us moving forward and keep us honest and keep our eyes on the prize and feet to the fire. So thank you to you both for your continued collaboration, and always willing to hear and react to what's been heard. So thank you. I want to say good morning to all of you, and it's happy Black Business Month to all of our virtual guests that are logged in. Thank you so much. We have great attendance, and to our in-person attendees over at EY. We thank you for being there. We, as Tim mentioned, have a robust presentation of programs for you this morning. This was formatted today specifically for you all to have an up close and personal way to learn about some of the products and services that we offer here at EDA, and to also provide the space in which you can ask questions and get answers, and we can hear, from you, perhaps some feedback about what you saw today, or just in general, feedback about EDA programs that maybe you have questions on. And we can't, of course, cover all of it and everything, but we hope we have some time today to at least dig in some aspects or in some into the questions that you may have. Okay, I want to give a special thank you as well to Mary Griffin for always being, the partner, the kind of partner that digs in, rolls up her sleeves and says, what is it that we can do to make this happen? Jackie's partnership over at EY is one that we are so excited about. So, thank you to both of you for being instrumental in organizing this and executing this program.
Michelle, can I just interrupt you 1 second?
Sure.
I really apologize. I had a little technical difficulty. I had to switch rooms.
Yeah.
And but Jackie Taylor, I just want to put a little more. She's just an amazing woman over at EY, and she stepped up to collaborate with us for today. So I do apologize for not mentioning her at the opening. And she's here today, and she's making a difference. And last thing I'll say, Black Business Month was founded by two friends of mine, John Templeton and Fred Jordan, both out of the Bay Area. We talk about Black History Month, founded by Carter G. Woodson, but these are people that I could definitely say we know personally. And so I'll yield back with that. Looking forward to hearing your presentation. Thank you for being here today.
Oh, you're so welcome. Let's get going. Christina Fuentes is our small business. I don't even know what her latest title is, but she is our extraordinaire, right? And she is the person that, has the, I like to say, like the boots on the ground information and knowledge and background to develop programs that are specifically curated for our small businesses. And so, Christina.
Thanks, Michelle. So good morning, everyone, and thank you for taking time out of your busy day to learn about some of our products and resources that we have for you. To introduce myself, I'm Christina Fuentes. I'm Managing Director of Community Development and Small Business Services, and you're actually going to hear from some of my staff members as well, too, to highlight some of the products. So we split it up in small business services grants, and then we also have some business banking products as well too, which you'll hear about the resources as well from all the staff members. So I just wanted to highlight, obviously during COVID, we provided some relief efforts, and as I'm sure some of you participated and received some of these benefits, which were, during that time, it was very much focused on relief, and now we're switching into this recovery kind of aspect. So when we were providing these relief packages, they were high volume, really fast, had to hit the ground running, and we provided basically a plethora to just be able to service any type of need, whether it was PPE or we had our COVID grants. We did we did 4 phases of those, but we also had, or we partnered up with actually the African American Chamber to provide technical assistance, whether it was accessing PPP or EIDL loans as well too. So we were pretty much hitting all aspects. And now, we're focused more into a recovery side, which is kind of how do we help small businesses who are doing these new kind of things of taking our new space or putting money into their space and, need access to capital. And thankfully, Governor Murphy has essentially passed the Economic Recovery Act, which put an appropriation to the Main Street Recovery Fund. And this fund allowed us to essentially create products. So some of these products are based on rules, which is legislation, and we have to administer the products by the rules. So some of it is a little boxy in which we have to stick to these rules because it is in legislation. So you're going to hear about these products that were created off of that, but we're also doing some pilots as well too. So some of the pilots are really about testing access to capital. We're testing out almost making more of a forgivable loan, which we kind of mirrored PPP as well too. So you're going to hear from Nye today about that product. But, you know, as you can see, we received $100 million, plus we also received another appropriation to really help support these products. You're going to hear the grants that are live now that really offer for taking on space, but then also improving that space. And then also our micro business loan program. We're also supporting our partners like our CDFIs as well too, who have 10 years of lending experience. Again, that's a statutory requirement. So we want to make sure that these entities that are receiving funding also offer programs to you. So you'll hear, you know, in the near future, we have some CDFIs that are creating their own micro business loan programs as well too, offering technical assistance as well on top of that. So we'll make sure that we can share that information with Mary, who will get that out to the members as well too. And so I will kick it over to Carla, who's going to highlight essentially the small business lease grant and the small business improvement grant that's available that you can apply for.
Thank you, Christina. Thank you. And as she said, I'm Carla Morrison, and I'm a senior small business liaison here at EDA. And as a former small business owner, an African-American small business owner, I consider it a privilege to be able to tell you all about some awesome programs that we have here at EDA. And I'll be discussing our lease grant and our improvement grant. Our lease grant launched in October 2021, and then our improvement grant launched in February 2022. Now, regarding to our lease program, that was a $10 million appropriation, and we do set aside 40% of the appropriation for those businesses that are located in opportunity zones. And the purpose of this grant is to offset lease payments that the business owner will have taken on when they went into their space. The application date cannot be more than 1 year of you going into the space, and it does have to be a 5-year minimum term. And what EDA has set up is 2 payment disbursements, and that will be 20% of the first year lease payments, and then there will be another 20% given of that next year's lease payments. If there are multiple locations, it is limited to 1 application per location. And this does not have an application fee, which I'm happy to say, it actually has an approval fee. So there is not a fee due until you are approved, and it'll be due at the execution of the grant agreement. Now, to be eligible for this, the business does have to meet SBA's definition of a small business, and that's determined by your NAICS code. We will need a current tax clearance certificate, and not to worry if that's not something that you are familiar with retrieving. On our website, we do have directions and a link directly to get that for you. You do have to be in good standing with the Department of Labor and Department of Environmental Protection, and you do have to certify at time of application that you're not in default of any other state assistance or EDD programs. Now you do, again, have to commit to being in the facility for at least 5 years. Now, in regard to the space, it does have to be at least 250 square feet, and the grant does cover up to 10,000 square feet. So if it is over that, that's okay. The grant is covering up to 10,000 square feet. It does have to be a new lease, no more than 1 year old. And if it is not a new lease and you're going to be amending or extending an existing lease, you do have to be adding 250 square feet to your space. So that is the only way that it can qualify if it's one that was already in existence. It does have to include a first floor, meaning it has to be street level. And if it is multiple levels, that's okay, but you do have to have street level operating business. We will go by market rate. So you do have to be being charged market rate. And again, it just cannot be more than 12 months old when you apply. So your lease just has to be only executed within the last 12 months of application. A couple of exclusions are that you cannot terminate an existing lease in order to pursue this grant. And any of those that are in default of their lease payments or leave a space during their grant period, you will have to pay it back. So there is a minimum of time you have to be there. high-tech businesses and business incubator members, they're not qualifying for those, but if an operator of an incubator, they can apply for this. Landlords cannot have ownership interest in the tenant, and the tenant just has to certify from the landlord that they are in good standing with their lease payments, and we have a document that is available on our website for that certification along with your application. And now I'm going to talk about our improvement grant, which was a $15 million appropriation. Again, 40% of that is set aside for those businesses that are in opportunity zones. And what this grant does is reimburse 50% of project costs. And your project can be construction, interior and exterior renovations, furniture, fixtures, and equipment. And the minimum project altogether at least has to be $5,000. And this grant is for up to $50,000 to reimburse you. If you do have multiple locations, there is one, it has to be one EIN. So that EIN can cover multiple locations, and you can put those multiple locations within this one grant application. So it is one grant per EIN. Again, no application fee, just the approval fee once you are approved. And now to be eligible, home-based businesses, you can receive reimbursement if you do furniture, fixtures, and equipment. So for home-based businesses, furniture, fixtures, and equipment can be applicable to this grant. The work has to have started after March 9th, but it has to be paid for within 2 years. So it can't be invoices and such over 2 years. And at the time of application, you will have to certify that the work has been completed and paid for. We will need documentation for proof of payment, and we accept that in the form of invoices, statements, canceled checks. You can use all of that to prove to us that you have indeed paid for the work, as it is a reimbursement grant. Again, our projects just have to be at least $5,000. And you are, as the applicant, responsible for local improvements such as zoning and building permits. If there is a project that is over $50,000, it's subject to green building standards. And you do have to have the landlord's permission, and you will have a certification that will be provided within your application to have your landlord sign to say that he did approve of this work in the location. If you have a contractor and they have more than 4 employees, they will be subject to affirmative action requirements. Now, overall, these 2 programs, they do have to come under the wage requirement, which is $15 an hour or 120% of minimum wage being paid to your full-time and part-time employees. We will accept proof of this via payroll documents such as WR-30s or the equivalent of a payroll document. And overall, in order to apply and be eligible for a lease grant, you must commit to being in the space for at least 5 years. If you do take advantage of our improvement grant and it's less than $25,000, you have to be in the space for at least 2 years following your grant agreement with us. If the grant is more than $25,000, then you do have to commit to being in the space for at least 4 years following the grant agreement. And so that is what I've covered today, and I'm going to pass it off to my colleague, Nye Marshall. Thank you for your time.
So thank you, Carla. I am glad to be here today along with my colleagues to present to you the wide range of NJEDA programs here to help our business community thrive. My name is Naima Marshall. I go by Nye. I am the Senior Small Business Liaison for Southern New Jersey. And today I am going to present some of the details of our Main Street Micro Business Loan Program. So the Main Street Micro Business Loan is a loan that was created to help support the working capital needs of micro businesses. By micro business, we mean businesses whose gross revenues are less than 1.5 million per year and have no more than 10 full-time employees. Eligible applicants can apply for this working capital loan for an amount up to $50,000. And eligible uses of this loan include the purchase of future inventory, future purchases of equipment, payroll, and any other working capital or day-to-day operational expenses that a business may incur. Eligible businesses include for-profit, home-based, and nonprofit entities in operation for at least 6 months, Again, gross revenues must be less than 1.5 million per year, and the business must have no more than 10 full-time employees at the time of application and 1 quarter prior to the application. The business must be based in New Jersey, and although home-based businesses are eligible, they cannot use the funds or the loan proceeds for residential costs such as the mortgage payment or the home lease payments. At least one business owner, just one business owner, must have a minimum credit score of 600 or more. There is a $100 application fee and a $400 closing fee at the time of closing. The terms of the loan are very flexible. So some of the benefits include a standard 10-year term at 2% interest rate, no interest and no payment for the first year, and there's no collateral required. And one of our favorite parts of this program is that it is forgivable. So that means the balance can be fully forgiven at the end of the 5th year. And the applicant will, at that time, need to just certify 3 things. One is they're going to certify that they are not in any default, that they use the loan proceeds for their accrued purposes, that there are no payment delinquencies of 90 days, and that the business is open and operating. So we are eagerly awaiting to be able to launch this program. It launches in early fall. One of the things I would suggest is to follow our newsletter by signing up at NJEDA.com. And at the time of application, when the program launches, you'll be able to go to NJEDA.com/microbusiness loan to apply. But now you can actually go there to look at our application checklist in order to be prepared for the program. So that's all I have today in regards to the Main Street Microbusiness Loan Program. And now I'm going to turn it over to my colleague, Daryl Spence.
Good morning. My name is Daryl Spence. I'm a Senior Business Development Officer with New Jersey EDA. And this morning, I'm going to speak to you about 3 loan programs. And I'm also going to talk about a collaboration that we have with the African American Chamber of Commerce for bonding. 3 programs that I will speak about this morning will include the Small Business Fund. I will also talk about the Premier Lenders Program, and I'm going to talk about our direct loan program. So for the Small Business Fund program, as you can see, a New Jersey-based operation for at least 1 year with revenue of less than 3 million or less, reporting a profit and that there's a financing need. So with the eligibility, you'll see you will need collateral. There is a small application fee of $300 and a commitment and closing fee of 0.5. You must meet a 1.1 debt service coverage ratio, and if you're a nonprofit, 1.0. And that simply means that for every dollar of debt, you have to cover it by 1.1. With this particular program, home-based businesses are not eligible. And you could work with some of the other programs that we talked about earlier. Now, the benefits of this program, the flexibility in interest rates, we can finance up to $500,000 fixed assets as real estate or equipment, or up to $500,000 for working capital with collateral still being needed. So this is the Small Business Bond Readiness Program. We work in conjunction with the African American Chamber of Commerce. And as you can see with this program, some of the highlights, there has been 105 graduates who have qualified for 40 million in bonding from this standpoint. With this program, you'll see that there's classroom training, and in that classroom training, you can see finance, you can see operations, contract law to avoid construction fraud, also optimizing your bond line, estimating and working with construction documents, QuickBook training, consulting services, and a whole host of other training. And when you look at the benefits, free capacity building solutions for small minority women and veteran-owned construction firms in the area of bonding and insurance, community outreach, capital management, compliance and monitoring, capacity building programs, back office services, and construction management. The New Jersey EDA partners with more than 24 premier lender banks to provide low-cost financing and a variety of small business lending. The New Jersey EDA makes a credit decision within 7 to 10 business days after receipt of complete application and outstanding underwriting questions or concerns have been addressed satisfactorily. There is a quick turnaround time for approval to closing and a strong incentive for borrowers, while the New Jersey EDA exposure by participating and guaranteeing in a portion of loans reduces the lender's risk. So with this program, we help support the lenders in reducing their risk. Eligibility, be in operations for at least 2 full years. So where you see that small business program, you can be in operation at least 1 year. With this program, you have to be in operations at least 2 full years. Commitment to creation or retention of 1 new full-time job for every 65,000 of New Jersey EDA exposure within 2 years. So as an example, if you borrowed $1 million, that would be about 15 jobs, equivalent to 15 jobs. As in the small business fund, you'll see that there's a 1.1 debt service coverage ratio and a 1.0 debt service coverage for non-for-profits. We can provide 100% loan to value for real estate and 90% for equipment. Benefits, once again, access to low-cost financing. You also can provide guarantees and line of credit guarantees. Financing can be used for fixed assets or term working capital. We have attractive interest rates and terms. The dollar amount can be up to $2 million for fixed assets and up to $750,000 for working capital, and line of credit guarantees up to $750,000. Now there is a list of premier lender banks on our website that you can go to see. Congratulations to Cornerstone Bank, who was just added to our list of premier lenders. Next, I'm going to talk about the direct loan program, which is similar to our premier lender program, but with the direct loan program, if you're working with a bank that is not one of our premier lenders, we can utilize the direct loan program. And once again, some of the eligibilities, you have to commit to create or retain 1 new job, full-time job for every 65,000. Once again, collateral is needed. With this, there is an application fee of $1,000, similar to the Premier Lender Program, a commitment fee of 0.875, and a closing fee of 0.875. Once again, the debt service coverage is going to be 1.1 for-profit companies and 1.0 for nonprofit companies. And home-based businesses are also not eligible for this program. The benefits, again, the flexible interest rate, up to $2 million of fixed assets, and up to $750,000 for working capital. Amortization can be up to 5 years, and it's possible for us to even extend that up to 10 years. Equipment can be up to 10 years, and real estate 20 years, and there are times that we can do longer than 20 years. With that, that concludes my part of the presentation. You will be given contact information for myself and Kathleen Duran and John Balsamo. We work in territory, so I have the responsibility for the North Territory. Kathy has responsibility for Central, and John has responsibility for the southern part of the state. So thank you, and now I'm going to go to my colleague, Kevin, who will speak about the Aspire program.
Hey folks, so my name is Kevin DeSmet. I am a senior advisor in our real estate investment programs group at the Authority, which effectively my chief job function is to help with the management of the Aspire tax credit program. So I'm gonna take you through the program today. And I will stress that this is an overview. The rules document that that governs this program is in excess of 100 pages. The application is like 40 pages. So there's no shortage of resources in greater detail than this on our website at the Aspire product page. And additionally, you can reach out to me. So my contact here is not in the presentation, but it's my last name. It's K and my last name at NJEDA.com. But additionally, there's contact information for the program folks on the webpage as well. But that is always a great resource in addition to these materials that are going to be shared, because it's a fairly robust and complicated program, which you'll see as I take you through it. So in a nutshell, Aspire is a tax credit to support real estate investment projects that otherwise wouldn't happen. So effectively, we're saying, without this subsidy, the economics of the project don't work, and it would not be undertaken, right? And so this is a successor program to a program that operated previously by the authority, that was the Economic Recovery and Growth Grant Program, or ERG. So this program is very similar to that in some respects, and then has new features and new aspects of it that are different. But if you are familiar with that, certainly on the residential side, it will seem familiar. And then on the commercial side, it is different, principally in the fact that previously it was a grant where you were getting an annual payment based upon taxes that were demonstrated to be produced at the project, whereas this is a tax credit that is awarded based upon the project size in the same fashion as the residential project. So a lot of the stuff on the screen right now is an overview and kind of the benefits of the program. They're all going to be discussed in greater detail, so I'm going to move on. So this is like a little bit more specific description than what I just said, but it's effectively the same thing. So the big takeaway on that first number is this program has a $1.1 billion annual cap for the 7 years of the Economic Recovery Act. It shares that cap with another program called Emerge, but I can say that annual number has started to toll since the passing of the Economic Recovery Act at the end of 2020, and the vast majority of that money is still unused because we've spent the last year and a half to almost going on 2 years now operationalizing these programs. So there is no like concern that if you have a great project and you bring it forward, that there's going to be a scarcity of resources, or there's not going to be availability. It's just not a concern that people should have right now. Generally speaking, the award is the base award is 45% of your project costs. And so project cost is a term defined in the rules, but generally it's kind of how much it's going to cost you to bring this project online. There are instances where that number can go up, and it's broken out in greater detail, but generally speaking, there's kind of two aspects from the percentage perspective. One of them is if it's in a government restricted municipality, which is Trenton, Patterson, and Atlantic City. Additionally, if the project is utilizing low-income housing tax credits and it is new construction of residential projects, it can go up to 60% of the project cost. I do not have a ton of detail in the forthcoming slides about the idea of a transformative project. As you can see, it is very, very large project. So in addition to this $100 million in project cost minimum, it also needs to be 500,000 square feet in size. And then if it's a residential project, it needs to be bringing 1,000 units to market, or that number can be smaller if it is a mixed use project. Suffice it to say, this is going to be not the majority of projects, and it's also limited to only 2 projects per municipality. So it's not the key topic here, but I just mentioned it so that folks know, wow, if you have a really big, massive project that you heard about, there are other aspects of the program that can accommodate that. It's a 10-year tax credit, so that basically, in the most basic sense, means if you get a $20 million tax credit award, you're going to build the project, you're going to certify that it's complete, and then for the 10 years after you've opened the project or brought the project online, you would get a $2 million tax credit each year, provided, you know, the building remains operational and in good standing for all the things that you've committed to. One of those things, and this is a new feature and benefit within Aspire, and I think to the extent that many of the folks on this call might be building trades or might be other small business owners. Every Aspire award comes with an obligation that they pay prevailing wage, and that's not just during construction. That is for the construction period plus the 10 years afterwards where they're receiving tax credits, and it is any, you know, construction project that happens thereafter. So they have to redo a portion of the project, or they have to make a significant repair to an HVAC system. That all has to pay prevailing wage, and then additionally all the building services work. So the janitorial work, and any of the, you know, painting or recurring maintenance that would occur at a building, that also has an obligation that they pay prevailing wage. There's a community benefit agreement provision that is invoked for a $10 million project, but that again is going to be addressed in greater detail. So we touched on this a little bit. So the award size is basically 45% of project costs, or up to $42 million. So it's kind of the lesser of those two things. With respect to the percent going up, we kind of talked about that. One of those is a commercial project in a government restricted municipality. The other aspect where it can go up is if they're using the low-income housing tax credits. From the dollar perspective, right? So it gets a little complicated because it's like you have to consider these two numbers, and they're not always the same with respect to like the eligibility or how you apply it. But effectively, the dollar amount can go up based upon mostly geographic criteria, but also this low-income housing tax credit criteria. So if it's a project using low-income housing tax credits, it can go up to 60% and $60 million. Everything else is kind of capped at 45 or 50%, provided projects in a qualified incentive track, which is effectively a census tract with poverty levels greater than 20% or area median incomes that are less than 60% of the, you know, so basically if the county median income is $80,000, but the census tract's median income is $48,000, it would be a qualified incentive tract. Or a municipality with a municipal revitalization index score of at least 50%. So I mean, the big takeaway there is if this project is located in a community that has been underinvested in, there's a very good chance that you can get up to $60 million for the dollar amount of the award. I mean, this is like, there's kind of three threshold eligibility questions. We touched on this in the very beginning. I mean, for better or worse, or I mean, most simplest way possible, there has to be a financing gap. So we basically are gonna look at this project based upon, you know, market comparables and say, you know, without this subsidy, would the project happen? And two, like the award is basically sized to an amount that would make the project have a rate of return that's appropriate based upon all these variables, what type of project it is, where is it located, et cetera. The next eligibility is geographic. The easiest way to be eligible is to be in a planning area 1, which is effectively urban municipalities. There's additionally, if it's in the aviation district, which is the area around the Atlantic City Airport, the port districts are kind of the areas around the South Jersey port and the port of New York. Or if it's in any, not in any of those areas, but it is within a half mile of a transit facility, it's eligible. The best thing on this slide is on the EDA website. You can see the link there. We have created a tool where you can plop in an address and it can tell you, you know, in addition to whether or not the location is eligible, it gives you a bunch of different other qualitative information about what type of municipality I'm in, am I in a qualified incentive track, et cetera, so that you can help kind of like get an assessment of what the award might be. Lastly, there's minimum sizes for the projects, and it's kind of like for a residential project, it's a dollar amount threshold. For a commercial project, it's a square footage project. So the commercial project is very easy. It has to be at least at 1,000 square feet. For a residential project, it's 5 million in a QIT or a GRM. It's 10 million if it's in a in basically not in Newark or Jersey City, provided in this instance, it's going to be the lower amount. So if you have, there are qualified incentive tracks in Newark and Jersey City, and any of these other municipalities that are smaller than Newark and Jersey City. So it really comes down to like, are you in a qualified incentive track? It's going to be 5 million. Otherwise, it's what municipality you're in. We have a scoring system that's created that basically is emphasizing public policy objectives that you know, making sure that these projects, in addition to satisfying all of these statutory conditions, are like good projects that are improving the places that they're being located in. So there's a scoring aspect around the built environment. So are they creating more sidewalk space and adding trees and addressing heat islands and all those things that would relate to how the project's designed. There's environmental justice scoring criteria. So it's basically like, is this a facility that's expected to be pollutant? And if so, is it in a community that typically has disproportionately seen these type of projects? And to the extent that both those things are true, we wouldn't allow the project. We require the applicant to kind of take an assessment of their risk to nuisance flooding or persistent flooding moving on. And then additionally, there are questions around adding an additional affordable housing aspect above and beyond what's required by the statute. First, all of these projects need municipal support. So you need both support from the governing body, or city council, and the mayor, right? So to the extent that sometimes they're not in the same mind, we're looking for both to make sure that these projects are going forward. There's an affirmative, in addition to the prevailing wage obligations, there's affirmative action, meaning that you have to make a good faith effort to hire minority folks on the job site. And you have to comply with our green building standards, in addition to, you know, those scoring aspects where you're accounting for flooding and other climate change issues. Projects can be completed in phases. This is a pretty technical point. I won't spend a lot of time on it, but if it is a really large project and it's going to take more than 4 years to complete it, there is an ability for a project to get a little bit more time to be brought online than what a normal project would be afforded. And then, as I noted previously, any project that has a residential component, so even if the project is predominantly commercial and there's a small residential aspect, it still has to provide 20% of the units as affordable in that project. And so I alluded to this earlier, and this kind of amplifies, right, all of these aspects that have been brought forth before. So every project that has a cost greater than $10 million has to have a community benefit agreement associated with it. So this is an agreement between the developer and the chief executive of the municipality, aka the mayor, right? But it's not just between the developer and the mayor. Part of the statute and the rules indicate that the mayor has to create a community advisory council that consists of members of the community, and they are afforded the ability to provide input to the agreement, but also over the course of this project, so the 10 years where they are getting tax credits, they get to determine, you know, is the developer making good on any and all of these promises that they made? So this would be a place where you could amplify the affordability requirements. You could amplify local hiring requirements in addition to prevailing wage. So all of these things, this is effectively a tool for the community to say, okay, do we like this project, or do we think that there could be more done by the developer to support the project? And having said that, the rules even allow for a portion of the tax credit to basically go to fund those incremental aspects of the project that are expressly satisfying these community benefit agreement provisions. The project, if it is a residential project, is not subjected to this net benefit test. However, if it's a commercial project, it is subject to a net benefit test. The net benefit test is effectively saying, is this project expected to create new tax revenue for the state in excess of the tax credit that's being awarded, right? So it's not a trivial bar, and it is definitely meant to say, you know, residential projects, I think, are treated differently in that they have an inherent benefit to the state in that New Jersey is one of the most expensive places to live, and part of that is the cost of housing. So the production of housing inherently is a benefit to all residents, whereas the commercial projects are really saying, okay, in addition to like, is this project not going to happen without the financing support? Is the state, you know, getting a good deal off of it? And that's really it. I definitely went fast, and again, I can't emphasize this. The program is that's just a thimbleful of the information and the requirements of the program. So please do not feel shy in reaching out to us. And we're all we do is really educate folks on the intricacies of the program. And at that, I'm going to hand it over to Emily and Alex. We're going to talk about the exciting work we're doing at the authority to support childcare in the state.
Morning, everyone. My name is Emily Apple. I am the program manager for economic security at the New Jersey Economic Development Authority. I'm joined by my colleague, Alex Himmel, who is our senior advisor for childcare. And we're here today to talk to you about the Childcare Facilities Improvement Program, the first phase, as well as EDA's work to support the childcare sector more broadly. So just to set the stage a little bit for EDA's work in the childcare sector, obviously childcare providers are businesses and operate and have access to many of the programs that our colleagues have talked about today. But there is a specific need to focus on childcare as an industry. And so back in December 2020, EDA issued a request for information, or an RFI, to learn more about ways we could support the sector and the specific needs of the sector, and ways that we needed to specialize to support childcare businesses. And there were a few things that we learned. One is very much an affirmation of, I think, what all of us already knew, and certainly has been affirmed by the COVID-19 pandemic, that childcare is an economic enabler, a workforce enabler, and mission critical for understanding our economy and getting people back to work. So it is not just, you know, supporting childcare as an industry. Supporting childcare means supporting all of the other industries that employ working parents. The other thing we heard from the RFI loud and clear was that childcare providers don't often consider themselves to be businesses. They really entered this profession as caretakers first and business people second. And so therefore really need help and assistance on some of the business fundamentals and the operational fundamentals of operating business. And because of that, they often struggle to access existing sources of capital through either public resources or private resources to support and grow their businesses, which makes their businesses even more financially precarious, which makes our whole economy at risk. Finally, the thing we heard and what we are going to talk with you about today more is that childcare facilities are in need of an upgrade. But because of this lack of access to capital, there is often an inability to secure the necessary funds in order to make those large-scale facility improvements that would improve the early learning environment for children, that would remediate environmental issues and hazards that have been persistent, but have long been unaddressed. So EDA, in collaboration with Governor Murphy and the legislature, has been able to provide support to the childcare sector in a multitude of ways, and our portfolio continues to grow every day. So as Christina Fuentes addressed at the beginning of this presentation, EDA provided a tremendous amount of small business emergency support during the peak of COVID-19, and specifically set aside $10 million for the childcare sector. And ultimately, we awarded, through all phases of the program, over $20 million to childcare providers, including $15 million going to childcare providers located within opportunity zones. And then with the partnership of the legislature, There was a $100 million bill passed the Child Care Revitalization Fund in the FY22 state budget that appropriated nearly $55 million to EDA specifically to address facilities needs for childcare, and then an additional $4.5 million to provide technical assistance to childcare providers, recognizing that childcare providers need assistance navigating these systems, accessing these funds, as well as just thinking of ways to bolster their own business operations. Finally, in the FY23 budget, there were additional funds appropriated to EDA to continue to help expand childcare facilities, specifically thinking about infants and toddlers, as well as a new $12.5 million employer innovation pilot that is going to be exploring new initiatives to help engage employers in childcare and thinking about creative ways and solutions to get employers more engaged in providing childcare benefits to their employees. So our portfolio has grown quite a bit to over $100 million, and I'm really thrilled that we have Alex Himmel aboard to help us navigate this. And so most of these products, with the exception of the small business emergency grants, obviously, which are a historic product of COVID, have not yet been launched and are currently under development. And I'm going to pass it to Alex to talk more about our first product that's going to be launching, the Child Care Facilities Improvement Program.
Thank you, Emily. And thank you to everyone for participating and hearing a little bit more about our program. So as Emily mentioned, the funding for this Facilities Improvement Program came from the Child Care Revitalization Fund, which was passed and then signed by the governor in July of 2021. The initial phase, we're calling this phase 1 of our program, is for $15 million with the possibility to add another $10 million if there's a demand for this funding, which we're hoping that there very much is. The program is going to provide grants for facilities improvements projects between $50,000 and $200,000 for childcare providers to do improvements, either exterior or interior upgrades, renovations, repairs, a multitude of different projects, and to strengthen the quality of their facility and really hone in on creating high quality learning environments for the children that are spending their days at these facilities, and strengthening their overall business. The grants are intended to cover the full cost of the program, and 20% of the total cost can be used for soft costs for things like architect fees, and there's a list of eligible qualifiers there. We're also going to account for a 15% of overrun costs. Anybody who's done construction knows that it can very much turn into unexpected experiences. So we wanted to make sure that we were accounting for that. Phase 1 is only going to be opened to licensed childcare providers, but we are going to make funding available in future phases for registered family childcare homes. New Jersey has a mixed delivery system. Children are attending childcare in a variety of settings, and so it was important that this funding mirrored that mixed delivery system. The other eligibility requirement, in addition to being licensed, is that providers must currently enroll or have enrolled in the past 12 months at least one child receiving assistance through the Department of Human Services Child Care Assistance Program. And then the final point that we'd like to share is that 40% of these funds are going to be set aside for providers located in Opportunity Zone eligible census tracts. I also want to mention that the contractors working on these facilities projects must be registered contractors on the Department of Labor Public Works registered contract list. So providers will be seeking out providers with that certification to complete the work. And I believe those are the details we have to share with you now. Thank you again so much. Applications are in development and are going to be available in the fall. As Emily mentioned, we're very excited to launch this in the fall and be able to start impacting the field in a significant way. Here's our contact information. If you have any questions, please feel free to reach out to us. And I believe I'm going to hand this back over to Michelle as we move into our Q&A session.
Hey, thank you, Alex. Thank you, Emily, and thank you to all the presenters. For right now, let's focus on some questions. And I think this is directed to Emily Apple. And or Alexandra, of course. Does the EDA Child Care Facilities Improvement Program extend to intellectually and developmentally delayed youth? And if so, what age group is eligible?
Thank you so much for the question. I was actually just in the process of typing an answer, but we can answer it live so everyone can hear the answer. This program is open to childcare providers that are licensed by the Department of Children and Families as childcare centers. So while there may certainly be a case where a childcare center provides care to developmentally delayed youth, but more likely than not, most of the childcare licensure guidelines are for children between the ages of infancy up to 4 years old is generally the target of this program. But there may be cases where an entity is licensed to provide care for children that age range that also have intellectual disabilities. So Alex, I don't know if you have any more information on the licensure requirements specifically, but you're also welcome to reach out to us if you have a specific question on that.
Okay, so, we got lots of questions in the chat now. Here we go. They're funding for folks interested in starting a new child care program. That question, Alex, is directed to you.
So to be eligible for this phase 1 round, providers need to be licensed by June 4th of 2021.
Okay, great. Next question, with the business improvement grant for home-based businesses, can you elaborate on FFE, particularly the equipment portion, and can you provide examples? So that business improvement grant would be,
yeah.
Okay, go ahead.
I can speak to that. So
okay.
Basically what we're saying for home-based businesses, you can't get a grant for improving your actual house, right? So you can't make improvements, add a new kitchen, add a bathroom, something like that. But if you're using, you have a home office, let's say, for example, and you have to buy a desk and chair or a computer or something like that to operate your business, that we would consider that FF&E. And so you can get reimbursed if you made those purchases. But as far as making capital improvements, it's not really a good fit for a home-based business. And that's per the statute and rules as well, too. So it's required that it's like that.
Okay, great.
Hopefully that answers. Yeah.
Yeah. And then the next question, you, Christina, can you provide, I think if this comes from Gary, information was absolutely great and timely. Are there any grants available to small businesses as a part of our small business programming?
So we highlighted if you're taking new space, but most likely I would think a lot of people would fit into the improvement grant because it's a 2-year window prior to application. So as we know, most small businesses essentially had to, whether it was buying a new equipment or making adjustments to COVID regulations, you can essentially get reimbursed for that. So it puts some money back into your pocket. But for right now, those are the two grants that we have that are open. And then microbusiness loan essentially provides working capital. So it's almost like a tiered approach to really helping small businesses as well. So those are the resources. And then, you know, once you're to a point of being like looking for access to capital, we have our CDFIs, and we also have our lending products as well too that are more traditional, require collateral as well.
Okay, great. And what is the turnaround time for the improvement grant?
So we have 2,500 applications that are in the system right now. Our team is processing them. So if you apply today, there will be a delay in getting an answer from somebody. I will admit that, right? So we're, I would say, everybody reaches out to Small Business Services at NJEDA.com for a status update. Essentially, we pull in the applications. In total, there's 2,600, and we have 2,500 in that are being reviewed. So we're not that far off. So I would say if you apply today, it would take some time to hear back from somebody. If somebody did apply and you're looking for some type of status because you haven't heard from somebody, please reach out to any one of us, whether it's Carla, Nye, myself, and we can get you an update for that as well too.
Okay, thank you. Let's see what's next. For small business equipment reimbursement grant during the pandemic, I started a work from home. Most of my equipment and supplies were invoiced and are billed to my name on a business company credit card and shipped to my home address. Since I was working in office to receive, can I proceed with providing these invoices as the documentation, and would I qualify?
So we have a lot of this scenario that comes up in the improvement grant. What we essentially do is we'll dig into the details because a lot of people make purchases on Amazon, right? So we can see essentially where the stuff was delivered. And if we see it's your home address, we're going to question you. And what people do is essentially take pictures if it is equipment. And you know, some people got small appliances or whatever may be needed delivered to their home and then put it into their new space, and they take a picture and they just show it was installed. So there's ways of working around that. We will work with you. That's the benefit to the lease and improvement grant. Although it may take longer, it takes longer because we're actually doing the hand holding and working with the applicants rather than just doing auto declines. So a lot of these people, there's very niche-y situations as well too, because it's a pretty wide open window. So we are working with everybody. So when you're assigned to a reviewer, that will get flagged because we're seeing it a lot. And we'll just dig into the details. So they do ask you questions, just make sure you respond timely to those questions, because the faster you respond, the faster you get to an approval.
Yeah, good. So, and we're talking about loans, right? So can you speak to the, I guess, the loan versus grant situation and why, you know, like and maybe talk a little bit about, you know, the COVID grants that we did and, you know, just the rationale for setting things up programmatically that that we're taking now, the approach.
Yeah, so essentially with COVID funding, we had a timestamp to spend that money by. So that's why it had to be expedited. It had to move faster. There were certain restrictions tied to the front end of that. However, when we have an appropriation that's more recovery focused, for example, tax clearance, right? A lot of people who applied for the COVID grants, you had to be in good standing at time of application. That was kind of non-negotiable. However, when we have rules, we put it in there that it's due at time of approval. So it gives you this essential kind of like window. If you apply, you're not in good standing, we give you a window to be able to get in good standing. But you as a business owner, you know, should really maintain that and work towards it because it's statutorily required for anything you want to receive from NJEDA. So we're not doing this just for the fun of it. Like we really, you know, it's a hurdle for us as well too. And that's why, you know, if you look at the directions we put on our checklist, it's literally screenshot by screenshot of how to do this now. So, because we understand it's a problem, but it's required by legislation that we have to get these documents. So we're putting in some of the flexibility. Microbusiness loan, though, is more credit score based, so you're not going to be touching underwriting. However, if you're looking to the traditional products that Daryl was talking about, those are traditional products where if you're buying a building or getting equipment or looking for working capital, they're going to look for collateral. So they'll look to, okay, do you own a home or can we use the equipment as collateral? So there's different requirements tied to the type of product you're pursuing. grants obviously don't have that type of requirement. You don't have to be, essentially you're just hitting the SBA definition, and it's a pretty broad window. So a lot of people get into the eligibility. However, with micro, it's very nichey. And again, it's required by legislation that all the appropriation, if it goes to a loan, has to service a micro business. And that's what Nye was mentioning. It's 10 full-time employees or less, making less than 1.5 million in revenue. We also ask for information. It has to be a quarter prior to application and at time of application. And that's because we don't want to see people reducing their staff just to qualify for a micro business loan, right? So that's why we're going to check with Department of Labor. They run the numbers to your WR30. Obviously, it's just W-2 employees. So if you have 1099s, they're not going to hurt you. But again, it's your full-timers too, because we all know as small business owners, typically you have a lot of part-timers and you have a limited number of full-timers because it's expensive to have employees in the state. So hence why we only look to 10 full-time employees or less. So the part-timers really don't hurt you as a small business. And the revenue requirement is kind of, it's just to providing access to capital to these businesses that are very early stage, because as we all know, it's a struggle to really find entities that are going to lend to you just based on credit without actually digging into the details. And as we know, that's the hurdle, right? Because you don't have the tax returns that really validate that you're making the money. So it's hard, but it is something that as a small business owner, you should be thinking about. Making sure you're doing your tax return that can verify that you are trying to grow, you are trying to make money. And this way we can help kind of like get you to a point of being bankable, from going from our micro up to a CDFI, then up to a bank as well too. So that's why we always want to try to like partner. We're doing a better job as well too, of trying to be better partners with our banks, getting them to understand that they should, push their clients to us as well too, so we can help them grow, but then also building up a chain and an ecosystem to really support all the small businesses.
So can we include clearing fees into the cost of equipment?
What is a clearing fee? I don't even know what that is.
I'm not sure. Whoever asked that question, anonymous attendee, can you elaborate on what you mean by clearing fees?
I will say some fees would not be eligible under the improvement grant because of our rules. It requires certain things that we have to take out. But again, I mean, you can always include it and we can just take it from the expense, and we do an expense tracker, which essentially will track all your information, how it was paid. Every applicant approves that, so they would look at it as well too. But if you include something that is not eligible, we would take that out. And just remember, somebody is looking at it. So if you provide 200 receipts for something, then that person literally will have to go through 200 receipts. And, we have people that are taking out a Snickers bar that they bought at Home Depot. So just be mindful of like the documentation you're providing and what people are going through and the timeliness.
Okay. All right. But basically, if they think it should be included with their receipt.
Yeah.
And then for the most part, we're going to.
Yep. We'll just take it out if it's not eligible.
We'll take a look at it. Yep. Okay. Yeah. Makes sense. So also for the small business improvement grant, does the business have to be located in an opportunity zone? And how can we determine if they are located in an opportunity zone?
No, you do not have to be located in an opportunity zone. It's actually opportunity zone eligible census tracts that we put the set aside in because it's a broader window than just the governor designated opportunity zones. We do have a map as well too, in which you would just simply click on the box. It's OZ eligible census tracts. Like it's a fairly easy box that you can click in, but it's more in the back end for us to track. We check that as well too. Our system is set up so it maps it automatically. But what that set aside does is it ensures that we're trying to put the money into the distressed areas that really need the support. So essentially that funding is reserved, 40% of it, to those census tracts. And so this ensures that distressed municipalities who may have a larger ratio of those census tracts are getting the resources that are really necessary to help improve those areas. So that's part of what we're doing.
Yeah, great. So I think we got a bit more clarity about the clearing fees. Equipment was shipped from China, hired a clearing agent to help clear the machine from the port.
Well, shipping is not an eligible expense under this program, so that would be taken out, and it sounds like clearing would not be eligible as well too. So the cost to actually get the equipment, so we would look at your invoice that you paid, and then the actual amount for the equipment would be what we would reimburse.
Okay, great. All right, and I see we have a couple of questions, particularly to you, Daryl, about Premier Lender Program. So I'm going to have them reach out to you. Okay, so I think we covered all of the Q&A questions. Mary, I don't know if you've gotten a chance to look at, did I miss any that came through in the chat? Caitlin or Mary?
I answered a question in the chat for Aspire.
Okay. Go ahead.
I can
Kevin,
go.
go ahead.
Just the
What was
question was, do you have to own the property prior to application? And so the answer is no, but you have to have site control. And site control is kind of a term of art, but you can satisfy it a bunch of ways. One of them is, you have a purchase agreement with a contingency period. You've executed an option to buy it. So you've paid a smaller amount of money for a period of time where you have rights to purchase it. If it's an area that's been designated in need of redevelopment, if the municipality has designated you the redeveloper, there's usually a corresponding purchase agreement to happen in the event that you proceed. So those are ways to satisfy site control. So you don't have to buy it. And then there's actually implications on project cost that relate to acquisition. So there's a limit on how far back you can go on an acquisition cost and have it be a project cost. And then additionally, the acquisition of land is not a project cost. So that acquisition would actually be limited to the cost associated with the building. So as I said before, there's a lot of nuance to the program.
Okay. So folks, for any applications that you are looking for any of the programs, we try to keep it all condensed. So we will, after this program, you're going to get a copy of this presentation, like these presentations, so that you can have them to look through them. You're going to receive contact information for all the people that you've heard from. We're also going to make sure that you get contact information for Kyle O'Donnell, who is somewhere, I think he's in the room over there at Ernst & Young. So we'll make sure you have his contact information, my contact information, so that we can get to you exactly what it is that you need. Links to all the applications, all that stuff is going to come to you condensed in one, document, so that, we make it easy for you to click on the loan or click on the product, and then you'll be able to apply, with the link. Okay. So no worries. You don't have to take notes, and try to get and jot all this stuff down. This is all going to be sent to you in a nice package. Okay.
And the biggest thing is, remember, we don't work off commission here, and we're here to help, right? So if you have questions or concerns before you even apply, and you want to vet things out before you apply, and because it's going to take time getting documents together, right? And you don't want to be stuck in limbo waiting to hear an answer. Feel free to reach out to us, and we will get somebody to reach out to you as well too, whether it's email, call, whatever it may be, just to kind of go through like, hey, am I a good fit for this program? Like, as you heard, Aspire is very complicated, so it's better to talk to somebody before you spend all the time kind of trying to fit into a box and then just to hear that you're not eligible. So it's just, we don't want to see people waste time and get frustrated as well too. So we're here to help.
Yeah, for sure. Okay.
And the application fee for Aspire is certainly not a trivial amount either. So some of the largest developers in the world spend hours and hours and hours consulting with us before they submit an application. So no one should feel like their questions are inappropriate.
Exactly. Yeah.
For sure. Okay. Good stuff, everybody. Any other questions? And then I'm going to kick it over to you, Mary, to do some housekeeping, and then also obviously to Jackie for the polling information.
Okay. Thank you, Michelle. We definitely had some great questions, and I really appreciate all the great answers that were available for our audience. I'm going to actually turn it over to Jackie so that we can do the poll next, and then I'll do the closing.
Okay.
Sounds good. So if you would now take out your cell phones And it looks like some people have already gotten started at menti.com, sharing some feedback from the session. So hopefully you all can see the word cloud that we have: comprehensive, helpful, informative, exciting, insightful. So this is great feedback. We've gotten 9 responses so far. I'll just give a hot second before going to the next question. And excellent. If you have any issues getting to the Menti site, or you're having issues getting in, if you could just let us know in the chat. And I can't see the chat, but maybe Christina or Mary, if you see folks that need help, just let me know. Good. Okay, great. So I know we have over 50 participants. I'll just let us get to maybe half that, and then we'll proceed. And what was shared, just as you guys are entering your responses, is, you know, this will be the first, ideally, of many sessions to just reach out directly to small businesses between the African American Chamber and NJEDA. So this feedback is going to be very helpful in making sure that the subsequent sessions are organized in a way that makes sense for all of you. Okay, Mary, let me know when you think we've got enough responses, and then I can keep going. Got about 19 so far.
Okay, we'll hold another second or two to make sure everyone has access, first of all, and then we'll move on to the second one. Okay, let's move on to number 2.
Excellent. How would you rate the length of today's webinar or session? So just input whether you think it was too long, too brief, or just the right amount of time for the information covered. Okay, that's good to know. Yep, all feedback is good feedback. Okay. It's like the popcorn popping, Mary. Once the pops start to slow down, I'll keep going.
Right, then you'll move on.
Exactly. Okay, our next question is, just so that we have this background, in what industry does your business operate? So if you can just share the industry that you work in, so we know the full array of business representation we have, that would be super helpful. Excellent. Manufacturing, logistics, healthcare. Excellent. Nice cross section. Excellent. Telecoms, finance, construction, distribution. Excellent. Okay. Think about the 20-something mark is our hyper response team. Okay, we're going to go to the next question. Is there any other topic or program that you wish we would have covered during this session? So this gives us an opportunity to have the team address any gaps that you identify and also understand what topics are most relevant to you. I feel like we should have the Jeopardy music playing while people are thinking. Well, that's resounding.
Yes.
Also, okay. Okay, that just means that multiple people are putting no. So what I'm going to do is spend time on the subsequent. Okay, great. Bonding.
More bonding.
Okay. Definitely an area that the Chamber and NJEDA have been very visible in.
Absolutely.
marketing?
We are taking applications for bonding.
Right now.
Right now, it is out on the website. So please, 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 get involved. Okay.
Excellent.
I wonder, what does marketing mean? Like marketing to help the businesses, or can somebody?
Maybe in the chat, if someone can share.
In the chat, yes, please share. Or you can throw it in the Q&A wherever, just so we can get more information.
And then people are looking for TA assistance, I guess, with financial reporting, learning how to do that, I'm gonna assume. Okay.
Or maybe technical assistance with filling out applications. It could be that, just if somebody can, if you could throw some supporting details into the chat, that would be great.
New
I
technology.
think we allow more than one response for the cloud. So if whoever put that in wants to specify what verticals they think are missing or what type of technical assistance, to Michelle and Christina's point, that would be helpful.
Yeah.
Great.
Also, more information around the new technology launch. Give us a little bit more information there. That would be great.
Okay. Okay. Next slide. How relevant was this content that we shared today for your business specifically? Very relevant, somewhat relevant, or not relevant at all? And that helps the team cater to the specific industries supported. Excellent. Let's give it a couple of seconds. Okay. Of all the contents covered today, what segments are you most interested in? And in this one, you can choose more than one segment, and you'll see that your options are actually aligned to the agenda and the speakers from today. Okay, I think based on our past responses, we've got around 5 or 6 more people we want to get in at minimum. Excellent. Okay, we're going to go to the next question. Based on today's webinar and session, how likely are you to apply following this session? I am applying right away. I'm not interested in applying at this time, or I'm interested, but still have some questions. Great. Really appreciate everybody taking the time to provide the feedback. Okay, excellent. If you will not be applying, well, this doesn't apply. We didn't have anyone say they wouldn't apply, so we're going to keep going. Thank you. That represents the entire survey. Like I said, the feedback is helpful for the NJEDA and the chamber. If you have any additional feedback or suggestions, or didn't get a chance to get your feedback in there, wonderful Kyle, his email is in front of you, and we will provide it, as Michelle said, in the follow-up. So thank you.
Awesome. Thank you so very much, Jackie. Wow, what a lot of information. We really appreciate the great questions and the great responses. As Jackie mentioned, this webinar is a pilot. We were trying to determine whether or not this is the right level of information. Your feedback that we just received is going to help us drive future webinars, so we do appreciate you doing that. I want to first of all say thank you to the audience. to both the audience at the EY location and the AACCNJ members who took the time out of their busy schedule today to attend. Because I know each of you, being small business owners, have a lot on your plate. And it's difficult sometimes to stop for 2 full hours to even participate in a webinar that is as helpful and as needed as the one that we're given today. So I definitely want to acknowledge your participation. I definitely want to give a great shout out to our partners that helped put this webinar / session together today. New Jersey EDA, Tim, Michelle, Cal, our presenters, Christina, Carla, Nye, Daryl, Kevin, Emily, and Alexandria. Thank you so very much for all that you do for us and all that you did to put this great webinar on today. EY, amazing Jackie and Tasha. Thank you so very much for all that you do. Thank you for the great tool, Menti. Didn't know anything about it. Now it's a new tool I know I can use in the future. So we do appreciate that as well. Now the question is, what's the next step? We asked a very important question at the end, and that was, do you plan to apply? Because that was the whole intent of this webinar, was to get you the right information so that you could apply for some of the wonderful tools and wonderful programs, grants, and loans that are available by New Jersey EDA. We had at least 9 people that says, yes, I'm ready. So we're looking for that to happen soon. There were about 11 or 13 of you that said you have questions. You have my email address, and I think we've shared Kyle's email address, and he will get any question that you have over to the appropriate NJEDA individual. So there's no excuses for not applying. Saying I have questions is not a valid excuse to say, well, I didn't do it. I'll wait till next week. I'll wait till next month. I expect to have either my email address flowing with questions or Cal's, one or the other. Because again, we want to make sure that you are taking advantage of these programs that can benefit you and help increase your capacity. So let's take the next step. And other than that, if there are no other questions or thoughts, I'm going to say thank you to everyone, and I hope that everyone has a fantastic day. Thank you all so much.
Thank you. Thanks, Jackie. And thanks, thanks, EDA. See you.
Thank you.
Hey, thanks everyone. Take care. Have a great day.
Thank you.
All right, bye-bye.